So a lot of people they come to me since I'm in a commercial lending business and they want to invest. They're very skeptical. They want to do on their own, but they don't have courage to do that.
Yeah.
They don't have experience. They're scared of, ups and downs.
Yeah.
They don't want to deal with the tenants, all those problems, and they're not sure if they invest that kind of money, what kind of return they get. So what's your advice to them?
Um, well, if you're scared or emotional, you should definitely be reconsidering if this is a good methodology for you. Emotions cannot rule how you make investment decisions, in my opinion. With that being said, I am a strong believer that once the basic needs and basic financial concepts are taken care of, like retirement accounts, etc., I think that having real estate is absolutely a great hedge. There's a reason why most millionaires have real estate in their portfolio. It's like something like 97%. Um, it's a great tax efficient inflationary hedge. So, yes, I think everybody should invest in real estate at some point. With that being said, to do it on your own at scale is really tough if you're not planning to dedicate significant amounts of time to this. Like everybody talks about mailbox money, like, oh, I'm going to buy a building because I want mailbox money. And it's really not, right? It's a lot
Mhm.
of active work to get there. So I think that's where we solve that problem, right? Like most of our investors are physicians and business owners and lawyers, and they have money because they're really good at the one thing that they do. They don't
Mhm.
wanna go out and learn the whole new language of real estate finance. They don't wanna learn private equity the way I'm gonna learn about it, right? And that's why even in the syndication space, I can compete with a lot of these part-time syndicators so well because respectfully, you are, a doctor for 40 or 60 hours or 80 hours a week. If you're lucky, it's less than 80 hours a week, right? I am eating, breathing, sleeping, real estate, business, markets, entrepreneurship. So I am just always going to have more data than you do because I don't have to spend 80 hours of my week operating in an operating room. So I think if you're looking to de-risk and you're not going to be the one managing and spending your time and energy and effort, and if that sounds awful to you, find partners where you can be the capital partner and they can
Mhm.
be the operating partner, and that's a really good relationship. Or you could be an LP, a limited partner in funds or deals like ours, or another sponsor that aligns with your investment theory.
So if they want to invest with you, what kind of return they should be seeking?
It really depends. In today's market, we see anywhere from like a 12 to 15% IRR projection is pretty standard.
Mhm.
Anything more than that is just too much risk for us to take on. So these are risk adjusted returns, right? You
Mhm.
could find deals that project a 20, 25% return. The question is, are you willing to take the risk of a 20 or 25% return projection?
Mhm.
You also might be more conservative. You might be like, you know what, I want to make like 6%. And you could definitely find those types of deals too. So it just depends what you're looking for. For us, it's 12 to 15% annualized is typically what we're looking at.
It's like more risk, more reward kind of thing.
Yeah, it's like a very middle of the road risk profile. It's probably more conservative, moderate than it is moderate aggressive, and that's because we co-invest with our investors. So I am a very more conservative investor than the average person my age.
Mhm.
So I look at those and I want deals that I would say yes to and that I would co-invest into.
Mhm. And most of your properties are like older property, you fix them and like you said, rehab and then rent it out.
Yeah, so most of our assets are value add. But recently we've shifted to more institutional and like management issues versus pure value add just because the yield on cost is just not as high anymore in today's market. Inflation has caused that increased labor pricing, increased material pricing. So yield on
Mhm.
cost has come down significantly. So we tend to not go for as heavy value add as we maybe used to.